Senseonics Holdings could double in price in just a few months. Give me 3 minutes of your time and I will tell you why they will double and exactly what to look for going forward. There's a really good dip buy opportunity right now, but you want to be strategic with your entry, so I will show you exactly what I am looking for in my technical analysis later in the video. Senseonics is projecting 10 times their revenue in the future, and tons of institutions are buying shares, including George Soros, who is a multi-billionaire and he owns over 5% of the company. And there's a lot of institutions who have been buying up shares in the last month or so, and they have over 20% institutional ownership, which is pretty significant for penny stocks like this. And actually, there was 35 institutions who have increased their positions, while just 13 decreased their positions. This is a really good sign because these institutions have access to a lot more resources than we do or the average retail trader does. So moving on, they released their earnings report recently, and we can see that the total revenue of the fourth quarter was 3.9 million compared to 9 million in their fourth quarter of 2019. And this decrease in price was primarily to do with the pandemic. And if you don't know about Senseonics, they have the first and only long-term continuous glucose monitoring system, which is the main product that they sell. And it allows you to actively monitor your diabetes for up to 90 days at a time. And if you don't know the significance of this, the average glucose sensor can be worn for just 6 days at a time, and the next best competitor is around 10 or 14 days. And why I see this company being so successful in the future is because they are actually in the middle of getting FDA approval on their 180-day eversense monitor and a 365-day sensor, which is why I'm looking to add on to my position during this pullback because they have a lot of potential growth in the future. They are also projecting that by 2025 their revenue will be 150 to 200 million compared to just 12 to 15 million currently in 2021. And I touched on this more in my last video on Senseonics, so you can check that one out after if you're looking for more information. Okay, so now on the 1 hour chart of Senseonics, we can see that we had this large correction happen earlier in the month. But back in February, a lot of people were asking me if they should buy Senseonics, and just because we had this support and trend line does not mean that you want to buy, because we were still making lower low, lower high structure. So I was telling people in that video, wait until we get a higher high and then come back to make a higher low to continue up to retest the highs. But because we didn't get this higher high, higher low structure, instead we continued to make lower lows and lower highs all the way down to here, which is why it's so important to wait for confirmation when you're entering these trades. But more recently, we had this huge spike down in price, which mainly had to do with the overall market conditions, and we have now come back up, and as you can see from this candle, there was a large rejection right around this previous support. And you might be asking, well, we're making higher highs and higher lows, is it time to get in? And in my opinion, no, it would not be the time to get in, because unlike the previous situation where we were making a higher high and higher low on the longer time frame, we are now making lower lows and lower highs on the larger time frames. So in order for this to be valid, in my opinion, we need to break this resistance level, make a higher low, and then continue up to the highs. And this higher low might come in a form of a flag pattern or sideways consolidation or break and retest, but this is what I am looking for to happen so that we can go up and continue to retest these highs made at $5.50 and even push higher than that and make a new high. So if you enjoyed the video, please consider subscribing, and with that being said, I'll see you guys next time.